that's exactly what you want to see in a bull market. So this is a bull market. You must be long. The silver stocks, the primary silver companies, those things are going to fly. I mean, many have moved, but they're not flying off the shelf. And I'm not taking profits. So that tells you what I think the future of that company is. They're spending tens of millions of dollars on drilling again this year.
Okay, guys, so today we have a very special guest, Jeff Clark. Jeff is an expert in the commodity sector with specific emphasis on the mining stocks. And today we're going to discuss the state of the overall economy, gold, silver, and we'll try to get some advice from Jeff for young investors. And we will talk about maybe certain individual companies. So, Jeff, thank you very much for being here.
Great. Thanks for having me, Vlad. Look forward to talking to you.
Thank you very much, Jeff. So I would like to start by talking about the general economy. So we have so much going on right now. Recently, Jerome Powell, in a way, admitted that he is not sure what's happening with the economy right now, even though he has so many different analysts working for him. And I was talking with Rick Rule recently, and he believes that we are already in a recession. So what's your view, Jeff, on what's happening right now?
Vlad, I'm asked this a lot, and I will tell you that over the past, several years ago, I was pounding the table. We're going to have a recession, and the reason was because of the yield curve. It went negative, it inverted, and that over the past six recessions, that predicted a recession was coming. Not the timing of it, but it was the best indicator we had in the markets to tell you if a recession is coming. It inverted. I said, look, a recession is coming. And of course, it didn't happen. So, Vlad, my answer is probably different than most people you'll talk to. Um, you really can't predict it. Some of the more reliable indicators have said we're having a recession, like I said. However, I could build a case for you that shows we're not in a recession. And frankly, we're probably not, based on the recent employment and job data. But I could also build a case for you that we are either in a recession or going into a recession imminently. So perhaps because of my age, but being in the markets a long time, it feels futile for me to try to predict if the economy is going into recession. So what I focus on instead is making sure I'm ready for a recession whenever one comes. And we will have another one. Those in the camp say we'll never have another recession. They're clearly wrong. Just look at history, please. But since I can't predict it, and I don't know if we're going into one now or not, what I focus on is making sure I'm ready. And the best thing I can do is make sure I have physical gold outside of the banking or financial system. That's how I prepare. And the reason I do that is gold is one of the best hedges against the recession. Historically, we know that of all the recessions we've had since like the late 1960s, all of them, gold has risen in most of them. It's only fallen in two of them, and twice those were single digit declines. So gold is a great hedge. So my advice to anyone is instead of trying to focus on why there's going to be a recession, there has to be one now. We're already in one. Maybe they're right, maybe they're not. My point is just make sure you're ready for it because one's going to come and use this time to buffer your lifestyle and your portfolio against what I think is an inevitable recession, even though we don't know the timing. So that's perhaps not the answer you were expecting to get, but that's me just sharing how I personally view things and what I personally do.
Sure, that's very interesting, Jeff. And so you mentioned gold, of course, and gold performed quite well. So of course, there are gold bugs who are still not happy with the price. That's going to happen all the time. But right now, the price is quite high, and the miners, they are at least the good ones. They're making a lot of money, even in the current prices. And if we look at the macro situation with deglobalization happening and the fact that it's likely that the price of gold went up, not because everyone suddenly began loving gold, it's because the big players, the central banks are getting involved. So what's your view on gold right now, Jeff? Do you still see it as a great opportunity for those who are looking to make gains instead of just protecting their portfolio?
Yes. A couple of things. One is, we're clearly in a bull market, and that's not really even up for debate. Gold's up 65% since it ignited on leap year day last year, by the way. GDX, the gold miners index, is up more than gold, and GDXJ is up more than GDX. That's exactly what you want to see in a bull market. So this is a bull market. You must be long. There's many risks and vulnerabilities in the economy, the markets, geopolitics, et cetera, uh, that suggests the next correction, perhaps one we're having now, does not signal the bull market is over. It's alive and well. The average bull market goes around 3 years. So, I just think that someone should use any corrections or pullbacks or dips, whatever you want to call it, as buying opportunities. If you don't have enough gold, A, and B, if you don't have exposure, meaningful exposure to mining stocks, if you want to speculate, because they are speculations. Of course, I think the regular stock market is a speculation as well. But so yes, I think you want to use any pullbacks, to buy. By the way, Vlad, I should mention, I've documented all the corrections and all that in the last bull market, 2001 to 2011. And there were 20 of them that were over 6%. 20 in 10 and a half years. That's almost two a year. Well, the biggest correction we've had so far is 6%. As you and I talk here, the current correction is about 3%. So it would not be surprising to see gold correct a little bit more. And if it does, that would be a signal to use it as your window to get the exposure you want, especially if there's stocks that you miss. There's some I missed. It happens. Use that to target companies that you miss or want more of, or whatever the case might be.
And would you say the same about silver, Jeff?
Yeah. Silver's interesting. It's been rising, pretty well, but the gold silver ratio is still above 90 as you and I talk. I mean, that's crazy. Historically, the average for the gold silver ratio is, depending on how far you go back, 50, if you don't go back as far, it's around 55. We're at 90. So clearly the opportunity is with silver. It was 20 at the peak in 1980. So there's a lot of, reason to believe just based on that alone that silver is going to outperform gold before this is all over. And that's, I think many in your audience know, gold leads, silver lags. That's how it starts in a bull market. We're seeing that, but at some point, at least based on history, silver outperforms gold by the time the bull market is over, meaning the gold silver ratio is going to fall, meaning silver is still undervalued, and meaning that many silver equities are still undervalued. Vlad, if silver does what many of us think it'll do, go back to 50, and boy, if it breaks through 50, look out. The silver equities, the silver stocks, the primary silver companies, those things are going to fly. I mean, many have moved, but they're not flying off the shelf. They're not attached to a rocket ship. But I think they will be once silver goes into another spike. And that's another point. Silver is very spiky. So you have to be in before the spike. Otherwise, it'll bypass you. You're not going to know when to buy. It'll be more expensive. Premiums will be more expensive. So unfortunately, the best strategy is you got to be in before the next spike. And I don't know if there's going to be another big dip for silver, but I definitely want to have exposure to silver and especially the silver equities.
And fundamentally, silver looks so good if we look at where the world is going, or where the big thinkers are telling us we're going to go, we need so much silver for absolutely everything. And yeah, it's really difficult for me not to see why silver should not do really well for the long term, for sure.
Oh yeah, there's a structural issue there. The Silver Institute just reported that this is going to be the fifth year of a silver deficit, meaning there's more use, more demand than the new supply coming on. There is supply in the background that is available, but those stockpiles are falling. They're decreasing. They're down by a third since the peak in COVID. Uh, but there's a big deficit, partly, well, actually, mostly because of industrial use, which is at record highs. Fabrication use is at record highs. So the big differentiator between where we're at now and where silver could go is investment demand. When investment demand really takes off, um, that's when things are really going to ignite for just the silver space in general. When you're uncertain, when you're scared, when you don't know what's going to happen, you buy gold. You don't necessarily buy silver. But when there's a financial issue, that's when silver really takes off. During the COVID bounce, a good example is the COVID bounce from March to September that year. We had the COVID crash in March, right? But from the end of March to September, gold rose about 40%, silver rose 140%. So that's the kind of thing that we will see, at some point with silver. It's not really spiked right now. Otherwise, the gold silver ratio wouldn't be 90, but I think that's coming.
Mm. And so, Jeff, so of course it's difficult to identify the stage of the bull market. And from history, we can see that usually money flows from the top, from the metal, then the big companies, and then it sort of trickles down to developers and the juniors. And so when you do evaluation of a company, do you look at a certain stage, or do you basically look uh, purely on individual companies' performance when you decide what type of company you want to get involved?
So that's a great question. The answer is for now is we do have bifurcation in the market. Some stocks are doing very well. They've doubled and tripled year to date. Some have gone more than that. Meanwhile, you have others sitting on big assets, by the way, that have gone nowhere, that have literally not moved, or maybe even be down. So the first issue is that a lot of the companies that are moving are ones that are going into production. Those are the ones that are jumping the most. And we have some of those in our portfolio, especially the paid letter. Um, those are being rewarded. So production is being rewarded by the market right now. They like that. What's not being rewarded is companies that are late stage explorers, simply trying to grow their resource, or early stage development plays. Even with the ease in permitting guidelines, we're seeing it takes years to put a mine into production. So early stage developers are not being rewarded. What is being rewarded is a late stage developer that's, got permitting lined up, financing lined up, and they're going to, begin construction. That's the time you want to get into a stock like that. I don't really follow the big guys, the producers, but again, same thing there. Some are doing well, some are not. If you forced me to give you uh, a top stock pick as a producer, that has to be Agnico Eagle. They're the most respected in the industry. Not that others aren't respected, but everyone looks to them as the model. And that would be a stock if you want to have a producer in your portfolio that I would buy. It's run up a lot, so be careful. But so anyway, production's being rewarded, A, and B, ounces are being rewarded. Discovery, as usual. Any big discovery or a huge drill hit or a big jump in your resource estimate, something like that. It's got to be something that's going to grab the market's attention, but especially something that is clearly going to be could be marked as a discovery. So those two things are where I'm kind of focused right now.
Mm. So, Jeff, I'm a big fan of the royalty model. Now, of course, during the bull markets, from my experience, from what I've looked at, usually the producers do better just because of the margin difference and because usually they're more speculative. But the actual model, the risk and reward, I believe, is really, really good. What's your view on the royalty model?
Yeah, that model's been around for a while now, and because of what you point out, royalty companies rose to a premium. The stocks really jumped, and they traded at a premium for years. However, what we've seen is some royalty companies have pulled back. They're no longer trading at a premium. Some are, but what I think you want to focus on if you're looking at a royalty company, and I discuss this in the book, what exactly to look for is you want something that's not so new that they can't it's going to be years before they see any cash flow. On the other end of the spectrum, if you're going to buy the Franco-Nevadas, the Wheatons, and all those, four of those top royalty companies basically make up the ETF, the royalty ETF. So why would I buy them individually when I can just buy the ETF? So what I'm looking for is something between that, a sweet spot where you've got a company that's established, they're diversified, they've got lots of projects, and their cash flow is about to jump. That's what you really got to look for. Not just lots of projects and, well diversified. That's just the starting point. The real trigger for me is their cash flow going to really jump? And I mean jump like double over the next 12 months or something like that. So, in that with that criteria, the one we really like right now is Vox Royalty. They're in the free portfolio, so anybody can follow along with this. We own it. We report on it like a regular newsletter. So we really like that company. It has run up a little bit, but I would use any pullback if you like the royalty space. That's probably a good one.
Thanks for that, Jeff. And could you give us names maybe of some of the junior companies in the mining involved in drilling and mining? Would you have any names for us?
Sure, I can give you lots of names. Um, we have two portfolios. One is free, one you have to subscribe to and pay. In the free portfolio, anybody can sign up for it, and it's a free letter. And in that portfolio, there's several that I like. AMark Resources has made a discovery recently, but I'm up over 300% on it, as anybody would be that jumped in when we did. And I've not taken profit. So that tells you what I think the future of that company is. They're spending tens of millions of dollars on drilling again this year. So there's going to be a lot of cash flow. I mean, a lot of news flow from them. And then let's see. Uh, the silver space, our two key holdings are Dolly Varden Silver and Vizsla Silver. Vizsla's run up, quite a bit. Dolly Varden is not, so that might be a good entry point for them. And the other one that a lot of people are overlooking in the silver space is Outcrop Silver in Colombia. I've been to the project in Colombia. I was there last year, so I was there for a week, so I know it firsthand. Um, they've got 35 million ounces, I believe. They're on their way to 100 million, probably. So that will force a re-rate of that stock. Another gold company I like is Radisson Mining. Big drill project underway. They had a new CEO that came in last year. Very aggressive, hitting high grade. They've already got 1 million ounces at over 10 grams per ton. I think it's over 10. Uh, so there's a very good future there. They could be bought out. Um, and then let's see if you want a couple copper plays. I really like Vizsla Copper, and I also like Gladiator Metals. They're one of our newest picks. They've not run off yet. They're up a little bit, but the buy is still there. You can read our report and why I like it so much on our website for free. So, but those are a couple copper picks that I really like.
Thanks for that, Jeff. I'm sure people are taking some notes right now.
Yeah.
So Jeff, I would like to ask you this question. So right now, there are a lot of people who are quite young and they want to get involved in this wealth building process. And there is so much going on right now because they can get involved with the Bitcoins, with the Teslas. They can hear us talking about get involved with the commodity sector. So Jeff, what advice would you have for the young person who wants to get started, wants to get involved, but maybe he has too many options to settle down?
So the first thing I would say is you do want to have exposure to gold, just like everybody should. You don't have to put all your money in it, but long research shows over the past 40 plus years that about 20% of your portfolio in gold is the sweet spot between risk and reward. So you do want to have exposure to gold. I encourage you, if you're a young person, to just buy an ounce of gold or go to a coin shop and put a coin in your hand and feel how hefty it is. One tiny little ounce of gold, and you'll feel how hefty it is. And I think that signals to a lot of people, hey, this is real. This is real money. And it is historically. So you want to have exposure to gold, and then if you want to get into mining stocks, it does require some education. That is why I wrote the book. I'm not trying to promote it, but I got so many questions about why'd you pick this stock, why'd you pick that one, that I had to write a book on it. And it was about 2.5 years. It went through multiple drafts. We hired an editor. It was a lot of work, but it's not a long read, and I tried to make it entertaining. In fact, you can read the sample chapter, a free sample chapter on the website on the book tab. And fair warning if you're claustrophobic, so about the scariest mine I've been in. But anyway, I wrote the book, and if you do read it and take it to heart, I can tell you you'll be ahead of the 90% of investors out there. So, but other than that, you need to do something to educate yourself about this sector, because buying a mining stock is not like buying, Apple or Microsoft or whatever. It's different. There are different factors to consider. And that's what the book goes into. But whatever you do, you need to get some education on, how you're going to do this. But I will say your timing is great. We're in a bull market. We're in the early stages of a bull market, and there are many opportunities out there. So it's a great time to get involved. You keep learning, grab your education, whatever form or way or manner you want to get it. But I like your timing.
Hmm. Thanks for that, Jeff. So I have been buying these for 6, 7, 8 years
Silver,
now.
yeah.
Hmm.
Yeah,
And
that's great.
you really get into a habit of doing it, and then every single month or every single quarter you're buying a certain amount, and it's like a habit, and it builds up in time.
There are sites out there where you can, say I want to put $100 a month or whatever into gold or silver or whatever. We have a relationship with Money Metals. They're a small advertiser on our site, but we all like them a lot. And you can check them out at moneymetals.com. So that's a great way to save though. Just devote a little bit each month, and then your dollar cost averaging and all that.
Hmm. So before we wrap up, Jeff, what excites you the most right now? It could be a company, it could be a certain project, it could be absolutely anything. What excites you the most in 2025?
I will tell you that my dad was a gold prospector, so it kind of runs in the blood, prospecting and that sort of thing. So um, I prospect as an investor. I'm not out there digging in the dirt. So I do tend to favor discovery. I'm focused on that, and that's higher risk, but holy crow, it can be quite a reward. Look at what Snowline's done over the past 4 years or so since I first recommended it. Look what A-Mark's done, that sort of thing. So I'm looking at discovery, and then secondly, I'm looking at the pre-producers, if you will, those companies that have made a construction decision and want to go into, they're going to produce gold. They're going to build their mine and go to begin to produce gold. That process takes about a year and a half, but long-term research that was done by my mentor actually shows that you have a 90% chance of a 90% gain in that 18-month period. That's remarkable for, speculating in the mining sector. So that's a sweet spot. I have several of those in the they're all in the paid portfolio right now, but I have several of those because I really like that. And it's really working right now because the market is rewarding production. So those are the things I'm focused on.
I love the way, Jeff, that you mentioned Snowline, because I've heard about that company from your website about 5 years ago, and I've made some
Yeah,
really, really, really good money on it, about 4x since I bought it. So that's yeah.
very good. Yeah. When I bought it, I'm up about 20x. So we're going to see stuff like that, Vlad. We're going to see, in fact, the last bull market, just the period from, '08, the end of '08 to 2011, that 3 year period in there, there were 141 10 baggers in that period. That's a lot. And, that's in 3 years. So many of them didn't stop when they went 10x, they kept going, right? So, but to have that many, what if you got just, you're not going to get them all, but what if you got 10% of them? What if you even got just 5% of them? Would you be happy with your portfolio 3 years from now if you had 5 10 baggers in your portfolio? That's kind of what we're looking at. That's kind of the thing that's happening here. So, I do think you need to be involved, watch for the correction, but get exposure.
Mm. Yes, I'm personally very excited about what's happening with the whole commodity sector. I believe there's a huge opportunity in it, and yeah, I think not right now it's a very good time to get involved because we're not waiting for the bull run to start. We're actually in it. Um,
Yeah, that's exactly right, Vlad. We're in it. So we're at the beginning stages, in my opinion. So we've got a long way to go, but we're in it. So you need to have exposure.
so Jeff, I love the conversation. Do you have a final word for us?
Well, how would you like to get a paid mining stock newsletter with stock picks for free? That's what we do at the Gold Advisor. I started it because, I've done the paid newsletter before and it's a lot of work. And I since started one, even though I'm focused on the sponsorship model. But I thought, I'm just going to do this because I want to share with people what I've learned and monitor these stocks just like in a paid letter. So it's my personal portfolio at the Gold Advisor. And by the way, if you like silver, we have a free silver advisor newsletter. We just started as well. There's already 6 companies in there. There's more coming. But all you have to do is sign up, get your password. It takes less than a minute, and you have exposure to those portfolios. They're ones we own. Um, they don't get invited into the Gold Advisor unless they're a stock we would own, and of course, we think that there's good potential for it. So you can look at all those for free, and then we do have a paid letter that focuses a little bit more on earlier stage stuff, higher risk, higher reward. And then, like I mentioned, the book, Peter Kraut, who does silver for us, he has a book. They're both available on the website. So we have a lot of resources. We have a brand new website. We're rocking and rolling, Vlad. I am going to personally take advantage of this, regardless of whether somebody subscribes or not. I am personally going to take advantage of this and maximize, what can happen in a bull market.
Certainly, and I'm a regular visitor on Jeff's website. I use it to find some new opportunities, to analyze the companies myself that maybe I haven't heard of. So I highly, highly recommend it. So Jeff, thank you very much for being here.
Oh, you're welcome. Thanks for having me, Vlad, and let's do it again.
Let's do it again. Thank you, Jeff. Thank you.